the stock market closing higher. And boy, if that doesn't get you in a good mood, I don't know what will. And we've had a pretty rough, at times, a pretty rough 2025 when the big sell-off started in middle of February. It sold off hard going into like March and April, but it looks like we had a nice sustained rally. We're up on the S&P more than 10% since April 21st. So that's really good to see. I'm sure everybody's portfolios are nice and green, which is cool. And today was a really nice green day. Certain stocks are really beginning to work. And I say that cautiously because I don't know if we're going to be in another sell-off. I wouldn't be surprised if we weren't, if that happened. I wouldn't be surprised if we had another sell-off. But my fingers are crossed that maybe, hey, this is going to be just a short bear market, but we'll see. Looks like Herdo is on. Good to see you. Happy Friday. Very good to see you. Appreciate you joining. And with me on this stream is Scott with Scott's Due Diligence. As I'm sure many of you are probably subscribing to his channel. He has a channel, does a lot of great stock analysis. How you doing, Scott?
Good. Thanks for having me on.
Yeah. Thanks for joining. It's been a while since we got together, and I always enjoy streaming with you. I enjoy watching your streams as well. And I know that you've had a lot of streams lately, right?
Yeah, just been sometimes you get in that mood where you just want to do it. It's kind of like anything else. Hopefully it stays, and I don't
yeah,
there's a lot again.
Yeah, cool. So let's take a look at the market. Then we'll look at a couple stocks, and whatever topic you want to go to, Scott, as well. That's you can bring anything up you'd like. So we got the markets are going up 9 straight days. And today, I think what got things going, because we had a couple earnings reports that were not as good as people would have liked. Like Apple came in,
Apple went down.
Didn't excite anybody. Amazon didn't excite anybody. They spent more money on that data center and cash flow came down. But then the story of the unemployment rate came in and the jobs report came in, and it was better than I expected. Non-farm payrolls grew by 177 jobs, which this is good news. People are getting jobs. So that's good. It's like, okay, some of the data saying recession, light recession. This data saying no recession. So it was good news. It was received really well by the market, and we were off to the races to the point where, look at the heat map. Isn't that a beautiful color? Except for one red spot. Apple was down, but a lot of other spots were nice and green. Microsoft is having a really nice week. Microsoft earnings were spectacular. Meta has had a really nice 2-day run. Palantir is up. The software space is really working. NVIDIA's up. Broadcom. Tesla was up. There's just a lot of green. Financials were up. Real nice. So
Microsoft is back to number 1. They're the biggest company in the world. They've been kind of like jockeying Apple, NVIDIA, Microsoft.
Here it is. Here's the list.
You have to look in the long term. What do you guys think in the long term? I mean, NVIDIA is a great company, but we kind of knew it was it was a little too optimistic, and we knew there was going to be a pullback. Who knew it got actually close to 4 trillion. It didn't get like 3.6, 3.7 trillion. So there was a pullback, and now it's coming down. So I'm sure a lot of people are going to jump in, get at a discount.
I think you're initially, I think you asked the question of which one would I think is going to stay on top. And I think it's Microsoft. And the reasons for it is they have a more diversified business. Like they have their cloud business is really growing. They have their applications business has always been good. So they have kind of a variety of businesses, including like LinkedIn. They have the gaming division. They have Xbox. So they have a lot of pieces to their overall company. Apple's kind of a one-trick pony, right? It's the iPhone or bust. And if that iPhone keeps growing, they're good. If it starts contracting, they're in trouble because they don't have anything else to fall back on. NVIDIA is similar, one-trick pony, semiconductors. If the competition catches up, or maybe businesses cannot spend anymore, they're like, hey, we're going to go bankrupt if we keep going at this pace, then they're going to fall back. Maybe some of these companies will catch up to Microsoft, like Amazon or Alphabet. I don't know if Meta will catch them, but maybe Google, Amazon or Google Alphabet might catch them. Yeah. So yeah, and we started the week, Apple was on top, and then Microsoft had a very good week. And year to date, Microsoft is up 3.27. Apple's down 18%. NVIDIA's down 14.83%. Amazon's down. Google's down. Meta is barely in the green, 1.97. And then the Oracle from Omaha up 19.07. I heard there's going to be a little get together in Omaha, Nebraska this weekend. What do you think of the big annual meeting?
It's always an exciting time. It's the only annual meeting that's like an event, like a circus. Most annual meetings are just like a few hours, but it's a big deal.
It's like a country fair, like in Los Angeles. The country fair in Los Angeles is humongous. The county fair, the one in Orange County is still big, but it's kind of like that. The county fair, they bring out all their companies and they eat ice cream. But they really know how to party, huh? They eat ice cream and stuff like that. Yeah, so that'll be interesting to watch.
How about that? And Netflix is up the most on this chart, almost 30%.
Yeah.
I'm never happy. I bought a lot of Netflix back in 2021. And we always look back and we're like, oh, I should have bought more. But there was a time when it wasn't even doing that well.
Yeah.
So,
well, I made money on Netflix and I'm happy. I'm not currently owning Netflix, but I made good money in 24 off of Netflix. So I already cashed that in and it kept going up, but you know what? So be it. It's, I'd be curious to see, maybe we can put that on the list. Maybe on today's stream, we can I'll follow my methodology, you follow yours, and let's compare valuations. And maybe Netflix is one where we can kind of talk about, hey, this is how I see Netflix. This is how I see their growth occurring. And this is how their cash flows are going to be in the future. And, you share your point of view. And I'd really like to hear that on your side. So.
Oh yeah. Yeah. It's a wild ride. I mean, you could have got Netflix,
cheap.
I think it was down to 120, 130 at the end of 2021. You might have got it in the low 120s, 130s. I think it might not have got that low.
What I love about Netflix is it goes to show that even like big super investors like Bill Ackman, it's hard, right? So from top to bottom, Netflix was down 74%. When the stock got to like this point, Bill Ackman's like, oh man, beat his chest. I'm buying into Netflix. And he bought like $2 or $4 billion. And then the stock started to go down. And then he sold like around here. He's like, yeah, you know what? It was a bad idea. And he left the stock. And then the stock just flourished. So this is one that Bill Ackman, I'm sure, is like, like you were saying earlier, you regret certain trades. I'm sure he's looking at this one going, uh-oh, I had it right. I just didn't stick around long enough.
Yeah, so. I bought it in January 2022, around the same time at 388, and it was down almost 40% from the peak. And I was like 388. Finally, it's come down, and after 2 months, I was down 40% on my investment. Mm-hmm. I'm like, oh, yeah. Boy. Now it's my best performer. I'm up 200%. When I bought it, at my worst, it was down. Like I said, it was down 40%, and my Apple stock was up like 200%. Now they're the same. Now they're both up 200%. Like that's just how much it's gained.
Yeah.
But
It's been a total winner. I bought
187.
so I held off of Netflix because I owned others, and a lot of things are
Yeah.
beginning to be discounted during this era. I bought more Meta during this era, but then I started buying here, and my investment went up really nice. And then I sold around here. No, actually, probably more closer to here. Um, so I left money on the table, so to speak, but hey, I walked away with a really nice gain. And I
A
bought it
gain's a
in two
gain.
portfolios.
Yeah.
I know. And my son, he actually, today's his birthday, he's 25, and I manage his portfolio. And I bought it in his portfolio and I bought it in my portfolio, and I sold it in my portfolio and I left it in his. So now it's one of the top performers in his portfolio. So that's the good news.
Yeah, I remember when it was coming down, and I remember on some chat groups, people like, "Do you think I should buy Netflix?" I'm like, "It's a roaring buy." I wonder if anybody listened to me, because it was such a good deal. But of course, at the time, people like, "Oh, Amazon's going to take them over. Why do they have such a good?
So
They,
the one
they don't
thing,
have a mode, blah blah."
what was going on in this era, and this is one of the, I think, one of the risks, or I guess undesirables of Netflix is Netflix at times has to spend a lot of money in production. Like they have to create their shows, they have to create their movies, and that's expensive and risky. Even the best studios swing and miss when they create a new movie and they pour
Yeah,
200 million or 500
really
million. And
expensive.
it's like, remember Waterworld with Kevin Costner? That was a big
Yeah,
bomb. I mean, we can
yeah.
go
There's
on
no.
all these movies as a bomb, and Netflix has to do that. And I'm like, well, I'd rather own the YouTube business because Google Alphabet takes no risk. They're like, hey, bring your content to us. We have the platform, and they take no
Yeah.
risk on content. So I decided out of Netflix, further into Google Alphabet. But so far, that was the wrong move. I would have made more money keeping Netflix, but again,
It can
investing
be
is
different. A
hard.
year from now, it might be different. Who knows?
Yeah.
Sometimes you get like, I get annoyed. Oh my God, why did I sell that? I would have made it just 80% gain. But then like a year or two goes by and I would have been down on the stock. So I probably wouldn't have sold it at that 80%. So like you just have, the only thing you can really do is try to find good companies and hold long term. Of course, things might change, but
Yeah.
there's no, you'll never time it perfectly in a bottom, time it perfectly in a top. It's just never going to happen. But we still beat ourselves up about it.
Yeah. I think it's fun. If anything, um, even I've been doing videos on super investors, and super investors. I mean, they've got teams of analysts. They have and the number one guy right now is Tepper. He's having the best year out of I think I've covered 18 or 19 super investors. And these guys have teams of analysts. They have resources, everything. And they still pick a couple dogs, right? Like this guy picked Amazon, which I'm also a stockholder. So I'm in it with him. Google Alphabet.
Yeah, I'm getting
I'm in it with
on
him.
Amazon too. Yeah.
AMD, he invested in AMD. Now that one's having a rough year. Even FedEx, right? FedEx, that one I kind of saw coming. I think that the logistics space is going to struggle with tariffs and recession. Then Amazon's doing their own deliveries and just a lot of problems for FedEx and UPS. So even the best, right? This guy's number one. He still is not perfect. Like he's got a lot of red on here. Now, he was smart enough to have bought, and this was risky. He bought into Alibaba big. Look at the investment he made. And he made
Wow, Alibaba.
$485 million on Alibaba year to date in 2025. So this is the number one guy. When we look at rankings, he's up 7%. The S&P is up is down, excuse me, is down
Yeah.
3.36%. It looks like 4 super investors are in the positive. Tepper, Burry, Guy Spire, Carl Icahn. Remember Carl Icahn, the corporate raider?
Yep.
Yes, that guy was not the friendliest guy in the world. And anyway, so yeah, we shouldn't beat ourselves up. If you're constantly growing your portfolio, creating wealth for yourself, creating a way for you to, I like to say, is have your money sleep or work at night while you sleep. Just constantly growing your portfolio, you're doing the right thing. And if you're learning, getting better, you're doing the right thing. But even these guys, like one of my favorite, probably my favorite super investor is Pat Dorsey. I learned a lot from him. I really get him. And he's down 11%. But if you go last year, he killed it. And the year before that, he smashed it. So you look at some of his big years and you're like, wow, that guy was a superstar. And this year he's having a bad year. So that's that.
Yeah. It happened. Berkshire, if you look at their annual report, there was like in 99 and 2000, he was like, I think actually down, and the market was up like 30, 40, 50%. And people like, he's old, he doesn't know what he's doing. And then what happened in 2001, 2002, 2003, the market was down like 40% and he's up like 10%.
Yeah.
In the long term, he's a winner. But you can't really focus on these short term.
And he sold Apple. Like, it was genius that they invested in Apple. You had to tip your hat to him. And then he sold a pretty good amount of Apple toward the end of 2024, which was smart.
He sold most of his Apple at which was like almost 10% of the company he owned at. When he first bought it, it was only maybe like 5% of his portfolio. But at one point, it was nearly 60% of his entire portfolio. Not because his portfolio suffered, it's because Apple went up so much. And he didn't even buy it like he didn't like buy it like in the 90s. Like, he bought it when it was a pretty big company already, but it was like 200 billion market cap, which is at the time top 5. Now, I mean, so that's what I'm saying. Like, you don't have to try to pick these winners like diamond in the rough, because it's probably never going to happen.
Yeah.
Look for good companies. Yeah.
So I wanted to cover 2 things. One of them, I think I've heard you say it, so we can revisit it. And I'm going to kind of get it started, but I'd love for you to finish the piece, which is, a lot of people, you hear this, like sometimes you hear these comments and kind of sounding like advice. And some people go, oh man, I'm going all to cash because the market's selling off. And that type of decision or action, like literally going all into cash, is super risky and very difficult. It's risky because the market can come back so fast. And if you went into cash, you're scrambling. And then it's really hard to buy back in because everything's going up so fast. So I've heard you say, Scott, it's so hard to time this market. It's best to be invested for the most part. Like, I created some cash, but I was still 90% invested. Like my portfolio, my capital is working in a stock or a bond. 90% of my capital is working. I created more cash just so I would have something to buy with. But in general, and I'll let you finish, it's really hard to time the market.
Because I know people who sold out and kept all cash, right? And then as the market's coming down, they're like, they text me, they laugh. You see that? I knew it. But they don't buy in. And it came all the way back. So I get it. It's great. It's kind of like when you own a stock and you're up a lot, and then you start like buying nice things. You don't actually have anything until you sell the stock. That's the thing. I don't know. Even if you did time it, you have such a short time frame. And remember COVID? Like, what was it, like 6 weeks? And it come right. You could barely blink. So that's that's what I'm saying. Don't listen to anybody. buy and hold long term. We're the winners. The people who talk.
Yeah. If you're
don't
selling,
get anything.
like, if you're selling out of a stock, let's say, for example, what's a stock that surprised me? Intel, right? I think Intel surprised a lot of people in the last 12 months. Well, I decided I didn't have a big position, but I'm like, I'm completely out of Intel. I mean, who knows what's next? I mean, they're surprising us this bad. I'd rather go spend my time focused on stocks where what they report I can believe, and then Intel will continue to be a dumpster fire. So that's a situation where I sell out of stocks completely on that type of situation, but I try to think long term and buy and in some cases have an exit strategy. Like TSM, Taiwan Semiconductor, I did really well with. I sold it, big gain, no regrets. No regrets on Netflix. Zim, I did well with Zim over like 3-4 months, made 50%. I'm out, and that's fine. So if you have an exit plan, that's one thing. But the whole concept of, hey, I'm going to time the market, because for all you know, you started selling here when the market's at 53.96, and you go, see, I told you guys, I told you. And then the market takes off and you're like, oh no, now I have to buy in at higher prices. So you just screwed yourself. And you felt good for maybe a couple weeks, couple months. And then it's really hard to get back in because it's hard to buy into a market that's appreciating very quickly.
Yeah. That's the only thing I think I could do better than the average investor is I generally don't buy at the wrong time and don't sell at the wrong time, generally. And that's what I think most people do. They buy when the stock market's going up because they hear about it on the news, people talk about it. So, but when the stock market's going down, they don't buy or they even sell. And so they sell at the bottom, they buy at the top. That's generally how they do it, and they blame the market. This is a rigged. How do you make money in the market?
Yeah, it's rigged. It's funny.
Yeah.
So I wanted to retell a story. I know I told you this story, and since Berkshire is going to have their weekend session, so it's my advice. Like, I have 2 sons. If I was giving them advice, is don't ever use margin. Don't ever buy on margin. Don't ever do it. And I'll tell you the story of Berkshire Hathaway. Berkshire Hathaway had 3 partners when they started. There was, I forget his name, I'll look him up. There was Charlie Munger and Warren Buffett. The third investor, and give me a second here and I'll look him up.
It was Steve Wozniak, right?
No. Steve Wozniak was co-founder of Apple.
Yeah. He was
Ronald Olson. So Ronald Olson, wait, third largest.
I want to talk about 1031 exchanges a little bit to show you mathematically. Welcome to This World Media. I just became a member of that channel. They do the what's it called? First Amendment orders. I'm kind of addicted to that stuff. I loved seeing the people go. They go to public places and they video record, and everybody gets mad at them, even though it's legal. Stopping in to show my support. Yeah, I appreciate it. Thanks a lot. Hey, can I do the 1031 exchange while you're looking at that?
Yeah, go for it.
It only takes 10 minutes, and this is when people usually click off when I do these types of things. So hopefully not too many people click off.
Do you need the screen?
Yeah.
Okay, I'm going to remove my content. Go for it.
I wanted to show you guys mathematically how this stuff works.
And Scott, do you want to share?
Yeah. Okay.
All right, you're live.
Okay, so this is similar to investing in stocks, whether you should invest in an IRA or brokerage. But I think it's a little more tangible with 1031 exchanges. And this is a pretty common thing if you're a real estate investor. And I know you know what this is, Victor, but pretty much is you can only do it with investment properties. Like you can't really do it for your personal home, although there's nuances to that. But it's generally for people who invest in to make money on buying commercial real estate. So it's just you roll over. Let me. I'm not that great at explaining stuff, so that's why. So you roll over your gains and you defer your taxes, and it's hard to understand logically how do you save money that way. But so investment one. And let me know in the comments. So say you buy a property, like an apartment building, for 100K. And then whatever it is, 7 years later, you sell the property and say it's 300K. I'm just assuming it's a triple. The first investment you tripled. So your gain is $200,000. So you have to pay taxes on gains. We all know that. It's like when you have a stock, you don't pay any taxes unless you sell at a gain. If you sell at a loss, you don't pay taxes. And if you don't sell, you don't pay taxes. So that's why you can keep accumulating those. So is that clear, Victor? So you buy a apartment building, 100K. It doesn't matter how many years later. It could be 2 years, 20 years, however long it takes. You sell it for triple the price, 300K. So your cost basis of $100,000. Your sale is $300,000. So it's a gain of $200,000. So you have to pay taxes on that $200,000. So let's just assume the tax rate is 30%. I'll try to not to explain so much because I know the more I say, the less. So you would have to pay $60,000 of taxes on this particular investment, but there's a nuance, or whatever you want to call it, for real estate developers, is a 1031 exchange. So you can actually, within 6 months of the sale, so you sold the apartment building, right? And you get $300,000 of cash. If you buy, it's like kind, or you buy a similar property, you can roll over your gains and you don't have to pay any taxes. So let's say you found another apartment building that was for sale for $300,000, and you buy it. You don't pay any taxes on this, okay? And let's say you have that apartment building, and let's just say it doubles. Say over the next 5 or 6 years, it doubles in price. So your cost basis for investment number 2 is $300,000, right? Sale of $600,000. So there's a gain of $300,000. You have to pay taxes on all your gains, right? When you recognize a gain. So you would have to pay $90,000 taxes, but you do another 1031 exchange. And you could do it over and over and over, 1031s. So say you receive $600,000 from the sale of the second building. You have 6 months to find a similar property. And let's just say it works out perfectly. You find another $600,000 property. So you defer the taxes you paid. So you don't pay any taxes, and you buy a third apartment building.
Yep.
And let's just say that doubles in price. So you buy for $600,000. 6 years later, it doubles to $1.2 million.
Mm-hmm.
So the gain is $600,000. So 30% taxes. So that's 180.
Yeah.
180K you have to pay on taxes. And let's just say you're done. You retire. You're not going to buy any more properties. So you have to pay the taxes for these previous 2 sales because you were deferring them using the 1031. So you have to pay the IRS $330K.
So could I add something to it?
Yeah.
Okay. So when you invest in real estate, it's kind of like big money up front, and then your money's tied up for a long time. So in real estate investing, you really, in a perfect world, you're like, okay, I'd like to invest in that real estate asset with no down and just participate in the appreciation of that asset, because real estate appreciates slowly, 2, 3, 4, 5%. Now, when you use the technique that Scott's describing, it's almost like when you sold the first property, the tax portion 60,000. It's almost like the U.S. government is co-investing in the next property with you. So you already found your first portion of capital, because that 60 grand is going into the next property's initial investment. So the U.S. government is now investing with you, so to speak. So you're taking, instead of paying tax, you're taking that capital and putting it into the next property. So that's the way that I think as a real estate investor.
Yeah. So you're deferring it. You're not paying any taxes after you sell the first one or the second one, but you pay it at the end. In this case, you pay $330K, and your profit. Not your profit. What's left over? You got 1.2 million from this third property, and you have to pay the IRS 330K in taxes. So that's what is left over in your pocket. Now hopefully this was clear. I know it's not the most straightforward thing, but let me show you what would happen if you did not do a 1031 exchange. This is what would happen. So you buy a property for 100K, and I'm assuming it's tripling in price, same exact as the first scenario, triples in price. So you have a gain of 200K from this first property. And let's just say you do not do a 1031 exchange, you just pay the taxes. So you pay 60K, right?
Mm-hmm.
And then you have 240K left over because you sold it for 300K. So you had to pay the $60,000 to the government. So that's what's left over from your initial 100K investment, 240K.
Right.
Now you take that 240K, you buy a property. There's no time limit because you're not doing a 1031. And I'm going to assume it doubles, just like the first example. It doubles, apples for apples. Hey, Kevin. The gain on the second investment is 240K because the cost, you bought it for 240, you sold it for 480, and you have to. I'm just assuming 30% tax rate for everything, just to keep it simple. Mm-hmm. So 30% on 240K, so you have to pay the IRS 72K, and then what's left over? 408,000 because you sold this for 480. You lost $72,000 of cash due to the taxes, so 408. Now the third property is 408, and I assume it triples in price. I mean doubles, same as the third one. I assumed it doubled in price. So 408, you sell it for 816. The gain is 408. You pay taxes of 122K, 30% of 408. And what's left over? 693K, because you sold it for this, 816 minus the taxes. Do you see the difference? It's 25% higher by doing a 1031 exchange.
Perfect. And then can I point one other thing out? So some people might be thinking to themselves, well, yeah, but what if I needed 100 grand cash, or I needed 200 grand cash for something, whatever it be? Maybe you're starting a business. Maybe you're buying a personal residence. Well, you could still do the first option, and then you find a good finance, company that will lend you on the property, and then you borrow against the property. You don't pay any tax, and then the interest is deductible because it's on the property. So you can always pull some of your equity out of a property and still keep the tax benefits.
You can always put a lien on our property if there's equity in it. If you're sitting on a house with $1 million of equity, you can tap into that whenever you want. I wouldn't suggest putting a lien on a property, but if say like in Victor's case, there was another investment, he needed $200,000 to buy this apartment building. I mean, a condo, and you thought it was a good deal. Yeah, exactly. Correct. You can do that.
Yeah, and real estate investors, right? These are leveraged investments and it's real estate. So it's not like super risky, right? The asset itself is very sound. So I know of investors that, I mean, they buy a property, they own it, they pull equity out, they buy another property, they own it, they pull equity out. They just keep going and going and going. Now that's going to
Yeah.
work so long as the market keeps rising. If the market were to drop, which I'm in fear that we might be seeing a little bit of a drop here in 2025, 2026, but so long as the market keeps rising, that technique has made people very, very wealthy.
Yeah. And but I've heard things. Dave Ramsey talks about it. He was using lots of leverage. He was buying real estate, but he wasn't putting much money down. He kept funding it with pretty much 100% of debt. And then there was he got squeezed. The lending was drying up, so they put a margin call on him. He couldn't come up with the money, and he went bankrupt. And you hear that a lot too. So if you're going to do this strategy, you have to have just something on the side just in case things don't always go perfectly.
Yeah.
But is that clear? This is exciting to me that I was able to put it together on a spreadsheet.
Yeah, it's clear to me
visually. Did anybody follow that or like it? It's the same thing with stocks. When you look at, should I put into an IRA or should I put into a brokerage account? You're deferring your taxes. When you put into your IRA, you don't pay taxes. When you in your brokerage account, you pay taxes if you sell the stock. But in your IRA, you can keep buying and selling. You don't have to worry about the cash that's going out the door.
Yeah, and that's a good topic. Let's stay on that for a minute because I think it's a good idea for all those that have a 401k and maybe you have a brokerage account with after-tax money. Here's what I would put in the 401k, because if you're a high earner, like you're in your career, you're making money, you're like, cool, making money, and you have a really good stock that pays a dividend, and that dividend, if it's in your 401k, not taxable. It just continued to reinvest in itself and it just continues to grow and you're good to go. If it's in your normal brokerage account with after-tax money, that's ordinary income. It's still good that you own that stock, but you have to pay tax on the dividend as ordinary income. So be aware that if you want to be a compounder, put your dividend stocks, potentially think about putting your dividend stocks inside your 401k. Then you'll never pay tax until you start withdrawing from your 401k. And you were going to do that anyway. Yeah.
Even if you set up your brokerage account to buy stock with the dividend, you have to pay taxes. It's still it's a taxable event when you receive a dividend.
Correct.
Even if you keep it in your brokerage account, even if you immediately buy something, so that company's forcing you to take money and pay taxes.
Mm-hmm.
So that's why some people like stock buybacks, because with stock buybacks, you're not forced to pay taxes. With stock buybacks, you can just sell the stock if you want, or keep it in there and let it ride.
That's right. Yeah. So those are good things to consider. Anything else on 1031s or real estate?
No. Sabir said, I heard you could buy property with your Roth IRA. You could. You can't with a Roth or other retirement accounts. You can't really take the money out until you're 59 and a half, unless you got to pay a real severe penalty.
I got a note on that. Finish your thought.
There are some situations that you could borrow against your retirement. If you buy a home, like a first primary residence, certain college expenses, you can borrow against your retirement, starting a new business. So there are some nuances to it, Sabir. So yeah, you could to buy a house, but you generally have to pay it back. It's not like it's a free. loan.
So let me bring something up that I learned this year. Is I always thought that 401ks, you cannot withdraw the money until you're 59 and a half. IRAs, you cannot withdraw the money until you're 59 and a half in order for it, and you avoid the penalty. If you withdraw it before then, there's like a 10% early withdrawal penalty. But my brokerage, they give me access to a wealth manager, and he goes, no, that's not true. On a 401k, it's 55. Okay. Check with your brokerage. Check with your brokerage if you have a 401k. But that was news to me. I'm like, what? I always thought it was 59 and a half. And he goes, no, 401k, 55, IRA, 59 and a half. And I'm like, I double checked. I'm like, are you sure? Because and he said, yeah, a lot of people have that misconception. So check with your brokerage, but that was big news to me. Did you know that, Scott? Did you ever hear that?
No.
It blew me away too. I was like, what? I've always been, it was like burned into my mind, 59 and a half. So that changes. Like for me, I'm 56. I still I'm professionally employed, but there'll be a day when I'm not. And we'll see how soon that day comes. And I'm like, well, that changes the game a bit. I'm like ready to go. You there, Scott? I think you froze, Scott.
Yeah, that happens. Yeah, I'm always looking at my net worth and my expenses and my income. I'm like, I want to see how many years I can not do anything and still, like, if I stop working today, can I make it to 59 and a half so I could tap into that? I'm like, it's kind of borderline. So I'm always looking at it.
Yeah, I created a model, and
yeah,
I'm good to go. I'll run out of money when I'm like 104. So I think I'm good. And the numbers are the numbers, but I don't think I'm gonna. I don't think I'm ever gonna stop doing everything altogether. I think I'd probably go crazy. And I'll probably just keep doing stock investing, keep doing my channel. I do manage my own real estate. I'm thinking of getting back into short-term vacation rentals, and because the market in some areas is pretty cool. Since we're on real estate, let me tell you a couple of examples that seemed interesting. Somebody that I know is a real estate investor. He what is really working for Airbnb is there's these ranches that people are buying in the West, and people are like, oh, I want to get away for the weekend. So they can go to some ranch in Arizona or Colorado or somewhere in California. And this is kind of maybe a couple hours away, driving wise. And then you get there and you're lodged in a nice, 1-bedroom, 2-bedroom cottage. And then you get up and you do outside barbecues, and maybe you get to ride horses, and you do all this like totally like old school stuff. And they have a whole ranch, right? So you have multiple properties on a ranch. People are putting maybe $1 million into a ranch like this. They have like 6-8 units, and they do really well, like cash flow, because people are like, hey, that's a vacation I want to take. And they go out there and they have a good time, give you a good review. So I'm like, wow, that's a great idea. I could totally see myself doing that. So that might be something I do.
That's interesting. Yeah. Because sometimes, like when you accumulate a certain amount of money, people think, oh, if I had X amount of money, I would not worry about anything and I would just relax. But you get bored, and you don't want to just do the same exact thing, just investing in stocks. So sometimes it's fun to like invest in real estate, start a small business or whatever it might be. And you're going to have successes and failures, but you got to try and live your life, because only one life.
So we have on the chat, we have a little bit of a debate on when we can withdraw from 401ks.
Isn't there a way to combine comments?
I don't know.
What do you mean? I thought we were in one. Is my stream separate? Are the chats from
No,
my
they're all
stream
together.
separate?
They're all together. I'm just saying,
Huh.
like some people are saying, hey, they did some searches, and if you separate from your employer, then 55 on a 401k is allowed. But again, somebody who I think really knows
Yeah.
what they're talking about at one of the biggest brokerages in the United States clearly told me that. So I'm like, oh, okay. And
If
let
you're
me ask
still
this.
at the company, if you're at the same company, you have your 401k, and if you're 57, you cannot access it. But if you leave that company, then you could access it. I think that's what it is, right?
Well,
I just read it.
Well,
now,
so I think we answered the question there. So if you decide to retire, you're going to separate from your employer, right? So you turned 55 in one day and you're like, okay, I quit my job. You just separated from your employer. Ta-da.
Yeah.
You're done. You're right. You're with me. So it is
Yeah,
55.
you have to just not, but you can't be working there. That's the thing.
Correct.
If you're 56 and you're employed there, you can't take it. You have to separate. Exactly.
Yeah, but that's, so you're correct that, hey, I'm going to start withdrawing money from my 401k and I still work. Okay, you're going to have to get a penalty. But if you decide, okay, I'm going to stop working, I'm 55 in one day, you're good. You on your 401k. And I never knew that. I don't know if you knew that, but I never knew that.
No, that's interesting. Yeah. IRA, you can't, I don't think there's a early withdrawal.
No, IRA is 59 and a half. I think unless you have a qualified, like, what's the term? If you are having a hardship, if you have hardship and you can prove it, then they allow you to withdraw it without penalty. Or maybe that was temporary for like COVID.
Yeah, I think you could take a loan against your retirement for for medical, to buy a new home, to start a new business, for college, certain college things for your child. I think it's just a loan, though. I don't think it's free money.
Okay. Well, yeah.
You withdraw from IRA to buy a house. Yes, you can withdraw up to $10,000 from IRA without penalty for the purchase of your primary residence. Oh, I wonder if you can just take it without paying it back. Now, I remember when I was in grad school, this girl was telling me she's borrowing against her IRA, but she has to pay it back with interest. So she's paying herself back.
Correct.
She's not losing out. Because so that's why I always thought you have to pay it back.
I invested in real estate on one deal. I did borrow against my 401k, but I felt like I'm really not taking any money out because I took 50 grand, put it into a property. That grew much higher. So I'm like, I just moved it from one asset class to another is how I felt. And I did that.
And you didn't have to pay it back?
No, I did. But I was just showing an example of, you can borrow against your 401k. And, you know, let's say you want to invest in a business or you want to invest in a real estate asset. The way, in my mind, and I'm not saying everybody should do this, but in my mind, I wasn't cashing the money out. I was moving it from stocks to real estate. And then that real estate did great. And I'm like, cool. It worked out great.
If you borrowed against your retirement, right? And say right before COVID, you borrowed and you would have went down 50% in your portfolio, but instead you didn't go out at all. And you put it back. You'd be crushing it. But you can't think of it that way. That's defeat the whole point of investing. But it can happen if you happen to withdraw it and it's during a bad time but the opposite could happen. You could take it out and the market you would have doubled your portfolio, but instead you don't get anything. But
all right. So let me check the comments and make sure if somebody's asking a question, we respond. So Herdo, good to see you. Mountain Finance, thanks for tuning in. Sabir, great to see you. Sabo, Sabo thinks Scott's awesome. And his question was, besides Meta, what else do you own in your portfolio? I guess that's a question for you.
Yeah, I have a bunch of things.
And Shadow Guy's on. Hey, Shadow Guy, it's really late in Switzerland where this guy's at. Thanks for tuning in. Appreciate it. Ed A to Z, good to see you. What do you think of Chevron, Scott? I've got an opinion on Chevron. I could share it after you're done. Did you want to respond? Did you want the screen?
Oh, you want? Oh, now you? Okay, I didn't know. Well, it's really a play against oil. So if you're bullish oil, these kind of stocks move with the underlying commodity, and I always think it's a pretty safe bet. I think they're giving a 5% yield, so I think on a long-term play, a company like Chevron's fine. Even if the stock doesn't move, you still get that dividend. But if it goes up, then you're killing it.
Yeah, I agree with you. And what's weird about like Chevron and oil, in 2022, the stock market really went down. At the same time, oil went up. Isn't that weird? And oil companies flourished. So it was almost like a hedge against other stock sectors. Oil was a hedge. Now, since then, my Chevron stock has kind of been a dog. It's down 22% since mid 2022. It's had that dividend, but overall, I'm not a happy camper. It's like, man, my capital has kind of been not getting it done. That has been parked with Chevron. So I think oil will likely go up. Oil prices will go up, but nobody can say when, and nobody can say how much. And the one thing I would say is I prefer to invest in stocks that are like in technology, communication services, healthcare, financials, and they have more logic to them. I hate these kind of stocks that, I'm dependent on a commodity because sometimes they work and sometimes they don't.
Yeah.
All right. So World Media, you covered that. Cool. Shadow Guy. So, all right. And Shadow Guy misses his IRA. Sabir, good to see you. Kevin Mendoza, good to see you. Thanks for tuning in. Hi, three guys. Investment for large bag of meth. Yeah. Okay. It's Kevin Mendoza. Yeah. Big Berkshire Hathaway meeting tomorrow. That'll be cool.
Yeah, I got to go 1 year. I don't know. I keep saying that.
Well, let's talk about a sensitive topic right after I get done with it, because I think we're almost done with the comments. So we talked about 401ks, and we validated it could be 55 if you separate from your employer. So logically, if you're like, okay, I'm 55, I want to retire, you either resign, or maybe if you're laid off, then you have access to your 401k and you won't have to pay the penalty. So we confirmed that. And then last half, thanks for tuning in. Eric Johnson, thanks for tuning in. And I think I'm good there. Okay. All right. So the age of Warren Buffett, he's 94. Charlie Munger was 99 when he passed. Two phenomenal investors. And I guess, it's a sensitive topic, but what happens, a year from now, 5 years from now, Warren Buffett passes, and then what happens to Berkshire Hathaway? Do you think there'll be an impact on the stock? What happens?
Yeah, I mean, short term, within a few months, I could see people selling and the stock going down. But it's kind of like when the market came down from tariffs, or the market came down from any event. The fundamentals didn't move the market. It's just the idea of this event causing a change in fundamentals, and we've already had good earnings from Meta, Microsoft, and they were and Apple. I think Apple and Amazon beat top and bottom line. So it's like until the fundamentals really struggle, and when people realize his name and his ideas were so important, but they're still worth what they're invested in, and they're invested in a lot of stocks. And if you look at those stocks, that's how you value the company. So
okay, so there'll be like a shock kind of maybe period of, maybe some investors leave out of fear. But yeah, I think whoever is behind Warren Buffett that is going to begin, I think it's Abel. His last name is Abel.
Yeah.
He's got some obviously big shoes to fill. And hopefully he gets off on the right foot. I know some transitions don't go well. And I'm thinking of like Disney. They went from a really successful CEO. They transitioned to the new CEO. Terrible. It was like horrible. And then they fired him and brought back the old CEO. Some of these transitions don't go well. But we'll see how Berkshire, deals with it.
But if you look at like Bill Gates leaving Microsoft, you look at Steve Jobs leaving Apple, and those two companies did much better.
Well, Microsoft, I was a stockholder of Microsoft for like 12 years, and the Ballmer days were terrible. And it wasn't until Ballmer like pretty much left that they really started to crank up.
Nadella is doing a great job. So one person
see here, like look at this era. Here's Ballmer right here. This is Ballmer. You see the graph?
Yeah.
It's like, man, the guy couldn't get the stock to go. And then more recently, this stock really went.
Yeah, I didn't realize it was that long a stretch without much movement. 2001 was pretty much equal to 2015. So it's a long-term bet. So if you were unfortunate enough to buy it in 2001, after a decade, you're like, God damn it, what's going on? This is supposed to be such a great company, and I'm down.
Right.
But if you're still holding on, you're doing great.
Yeah. It's a great company. I mean, so I work in the software industry. Microsoft's been my competitor for the most part for 25, 30 years. And I have a lot of respect for them. They do a lot of things right. So, yep. And now I root for the Clippers, the Los Angeles Clippers, and the ex-CEO, Ballmer, he owns the Clippers. So hopefully he does a better job with the Clippers than he did with Microsoft.
Yeah. I never realized he didn't do good. I thought he did a good job. Maybe when he was under Bill Gates, he did a good job.
Yeah. Okay, good. So is there a stock or anything else you want to bring up and talk about?
No, I mean, I'm just excited that the market has proven that tariffs aren't going to bring us down like everybody thought. It's all noise. We got a lot of good discounts. Hopefully people jumped in, especially some stock like Tesla was down a ton, and it's still down quite a bit. But
this is the 1 week. This is the 1 week heat map, and look at Microsoft in 1 week up 11%. Meta's up 9%. Apple is, I mean, it's only down 1.88%.
And it was down 5% today. So
yeah,
it's because it today really drug it down. Yeah, I was surprised Microsoft was struggling because I bought a lot of Microsoft last year. I was using all my dividends in one of my accounts to just buy Microsoft. So I was accumulating Microsoft last year. And at one point I was down 10% a couple weeks ago. Now I'm finally up.
Yeah. It'll be, the one area that's been fun is, the smaller caps, picking some nice smaller caps. And those have been like a couple have been doing really well that I've gotten into, and in pharma and in technology. So that's been fun. And some of the small caps will outperform these big caps, because when these guys move, like Microsoft moves 11%, that's like close to $280 billion of inflows. I mean, that's a lot of capital. Where a small cap is
Yeah.
like, they got $1 billion market cap and they go up 20%. That's, 200
million.
200 million. It's like,
Yeah.
it's like nothing.
It doesn't move them. Like Microsoft, if that moves 3% like it did yesterday or today, that moves the market.
Mm-hmm.
That's like the bottom 10% of the entire market.
Like Instacart was up 13.64%. Their earnings were good today. This is 11.87 billion. This had pulled back. I bought into it. They had decent earnings. I mean, they weren't like, head smashing, growth, just good growth, expansion of profit, expansion of free cash flows. This is a cash producing company. I think this is insulated from tariffs, right? They're not going to charge tariffs on, food that we're growing here in the US, food that we're processing here in the US, putting it in stores, and then they get delivered by Instacart people. So this stock's doing well. And I think it's going to do better for the rest of the year. And I still see an additional discount in the stock. So that stock did well.
Yeah.
The other stock that I don't know why it went up so much. This is AppLovin. You familiar with these guys?
Yeah.
They went up 10%.
Wow.
And there's no, they didn't announce their earnings. They announced next week. There wasn't any specific reason why they rallied. Just the market was rallying. Cool. And I guess a lot of people wanted to buy AppLovin. And this stock over the 1 year has just gone on a tear. Year to date, it was so high, it came back down, and now it's still down 5% for the year. But boy, the monthly is probably looking good. Yeah, 8.8%. So that looked good.
Yeah. You always look at these stocks like, if I would have just put all my money into it, I could have had millions. But that's hard to do. It's kind of like, like in roulette, you bet $100, and then if you lose, you bet $200, and you keep doubling up your bet. It's kind of like that. Like you could put all your money into a stock, but if you get burned once, then you're done. You can't.
Yeah, I've worked hard for my money, and I want to make sure that I have plenty of money to be comfortable for the rest of my life. And betting it all is just not what I'm going to do. Dexcom, med device company, announced they had decent announcement, up 16%. These guys are 32 billion in market cap revenue. These guys do this. People that are diabetic, they need to have a device that measures their sugar levels and glucose levels, and that's what they do. All right, so Sabir's got a question. Sabir bought a super chat. Will you sell XYZ to buy Webull? Is that a question for you? I don't own XYZ.
I don't own Block. Block went up a lot today. You own? I thought he was doing it towards you. Do you own Block XYZ?
I don't. I've covered it in the past on videos. They went down big time.
Down 20%.
They were downrated. I haven't liked Block in a long time, and part of the reason is, they grow their top line, and then you're looking at Webull, so we can compare the two. So here's the things that I don't like, and I haven't liked about Block for a while. You have good growth. Okay, that looks fine. They're kind of a competitor to PayPal. That's who they probably have as a closest peer. PayPal is Venmo. Block has Cash App. They're both in the payment, processing system. Block would like to say they're more crypto than PayPal. I guess maybe they're right about that. But when we look at cash flow, it's kind of been all over the place, like 34, 713, 5, negative 50, 1.5 billion. And they're getting better at it. But it's just, when I look at a company like that, like this, it's hard for me to put together a forecast. It's like, there's no consistency. It's easy to look at a company that has like a natural progression. Each year cash flow keeps growing. You're like, okay, well, I expect it just to follow that growth rate. This one is like, man, it's just a guess. So that's been part of my reluctance to really believe in these guys. And you see, it's even dropped in the quarterly. When we go to cash
I'd
flow.
rather own Block than Webull, if that was the question. I'm not a big fan of Webull's a brokerage, right? I mean, two totally different companies. I don't know. I generally, it's not a business model I would want to invest in. I just don't see.
Did Webull just go IPO?
Yeah.
Okay. And this one
they've been really volatile the past
look,
couple weeks. Like one day up
$13 to $60. Whew. Yeah. Usually young companies like these, let me show you. One good example will be Robinhood. And maybe we can learn something from Robinhood. I own Robinhood, and I'm happy that I bought it at the right time. But if you look at Robinhood, they IPO'd, they crashed and burned. Look at that. Oh man, painful. So people bought in at like $50 a share, and then it was down to $7 a share. So I started picking up shares, and now it's just doing great.
Wow. Yeah. That's the thing. Like you buy it and then you're down 20%. And it's so hard to keep buying like dollar cost average. It's painful. But in that case, you could have been a millionaire. Who would have known if you kept putting 10,000 every time it dropped? Now it went up to what, 80?
But now the problem. So I'm very happy with Robinhood. But it's so hard to buy more shares when you're like, oh my God, it's up 50% in like a month. Now it's up 100% in 3 months. And you're reluctant to put in money because you're like, it might settle down. But the advice I would give you on Webull is, let's see if we can get this, because that one just IPO'd. So we can't chart Webull. So let me just chart Robinhood and deliver what I would do in a situation like that. So obviously Robinhood is a quality company that had a really good vision, which was, we're going to take over a certain demographic of the market. We're going to take over the young investor, and they've dominated, and they've come out with products that have really worked. But the stock settled down. I would wait for Webull to settle down. Maybe a year from now might be a good time to invest. But when you do it early near the IPO, man, be careful, because look at these losses. And then you have to wait around for a long time if it ever recovers. The people that invested here and hung on, they had to wait 4 years for them to just break even. I mean, you don't want that. So I would pump the brakes on Webull, give it some time. That's what I would do. And let these, I never buy IPO stocks. They tend to do this. Even our friends at Google, as good as they are, I think it was Google.
Meta, Facebook, I bought the very first day it started trading, and I was down almost 50% after 3 months.
They just tend to do that. So you got to let them settle down. And it's not like the stock's going to like double on, over the next year. Investors are going to be reluctant to buy into Webull until they start seeing more earnings, like legitimate earnings, and they see, okay, the company's growing. Okay, that looks good. But few stocks are going to flourish like that. Even Palantir, right? Palantir's on a rocket ship ride. Right. But let's look at the chart. See how they started off here and then they settled down 80%. Hoo-hoo.
And I sold it like an idiot. I was the worst investment, worst sale I ever made.
but the logic is still intact, right? If you let this thing settle down and then you buy because you like the company, you would have had 4 more earnings announcements into Palantir. So you confirm, yeah, that's the company that I think they are, and I really want to invest in them. And then boom, you invest and you do well. I was not smart enough to buy Palantir. I think they're overpriced, but who cares what I think? The market thinks it's an awesome company. All right. So that was the answer to your question, Sabir. Thanks for tuning in. Thanks for the super chat. And then Sabir, it reminds me of Robinhood. Yeah. It might just like, I think there's that space is fertile. I think the old school financial services companies, their days are numbered. And I do think, like, for example, I'm going to go back 15, 20 years ago. I had a good net worth. I was working professionally. I was really busy. I was invested in real estate, and I hired a wealth manager, and the experience was terrible. The guy, like, he had nothing like valuable to share. He was going to put me in like mutual funds, ETFs that were
you
just
pay them a fee, and they do worse.
And I'm like, and I would want to talk about stocks, and it would annoy him. Like, he'd be like, "Well, what are we going to talk about stocks for?" I'm like, "Because it's my money. Because I've earned the money, and I want to know, how should we grow my wealth? That's what we're here for." So the long and the short of it is, I cut that relationship off. I'm always learning, so I took it as, okay, maybe wealth management isn't for me because I'm more of a hands-on guy. I've earned the money. I want to grow the money. Back to Robinhood. Robinhood is going after a market that's been lethargic. The whole financial services industry, it's kind of lethargic, and they're taking over. When they came in with zero cost trades, all the other firms had to adapt. Everybody is adapting to Robinhood. Robinhood's not adapting to anybody. So I love that about Robinhood. If you think Webull is going to come in and disrupt a valuable part of financial services, then I'm with you. I think it's a good idea. Just let the stock settle down. Buy it at a good price. Don't overpay for it, and be a little bit patient. And then Mendoza, Monday is the Super Bowl of earnings with Palantir. Nice. Yeah, we got more earnings next week. Fuhat, Vitru. I'm not familiar with that one. Eric Johnson. The great wealth transfer is going to come. No one will want to use old stuffy platforms. I agree to some extent. I take offense to the term old because I'm old.
I don't know. I use E-Trade. I've been using E-Trade forever, so it works. It's free.
Yeah, I'm happy with my situation. Like my college days, I was on a computer, but we were still on kind of like, paper, and we were taking exams on paper, and like my kids, 20 and 25, those guys have been digital since they were 2. So Robinhood's made for like my kids and maybe people up to the age of 35, 40. And then there's us that kind of came in a little before that. I'm happy with, doing it the way I do it. So I think, but the addressable market that is growing is the younger investor. The older investor is dying off. All right. So Michael Anthony, good to see you, man. Was good. So Robinhood earnings were good. Robinhood came out. They were up 4%, which was very good. And their growth is still there. I mean, look at the growth for 59.65%. And they keep cranking out profit and cash flow. So I'm good with my investment in them. It's hard to put money into them. I have bought shares from time to time. It's the best percentage performer in my portfolio right now. So I thought their earnings were good. I thought their earnings were really good.
Yeah, Netflix, I think took over my number one spot. Oh no, Berkshire is number one.
Nice.
but Netflix is almost 200%.
All right. So Fuhat, super chat. You're missing out on Vitru. Vitru. Let's talk about Vitru. So am I getting this right? Vitru.
Virtu Financial, I think it's Virtu because it's VIR.
Virtu Financial. Vert. So hopefully we're hitting the right one. 6.35 billion. Okay, cool. So financial services operates as a financial services company in the US, Ireland, and internationally. It operates through two segments, market making and execution services. And if you could put in the chat, I know it's kind of hard, but what's the story that you love behind this company? Because these guys are financial services. They're in a space that I'm not that experienced in, and maybe you are, Scott. They do Robinhood market orders. Oh, interesting. Okay.
Is this just a regular brokerage account, broker dealer?
Or who had saying that they do Robinhood market orders? So are they a market maker for Robinhood?
Virtu announced a $1 billion deal to acquire a brokerage and financial markets technology firm investment. So it looks like they do have a brokerage arm because they acquired a company in 2018, and but it looks like they're more like a full menu kind of service, so to speak. They
So they are a market maker. So they do liquidity, global markets, trading solutions to its clients. So they're more their customer is like Robinhood. You know how like Citadel is that big market maker, and those Citadel supports like big brokerages. I think these guys are trying to cut into that space. So they're growing nicely for the 1 year, 31.75 in 2024, trailing 12 months, 43% growth. So growth looks good. So growth is there. Let's take a look at free cash flow. They do cash flow. Hasn't been growing, but maybe because they're putting capital in the business since they're growing. Let's take a look at the cash flow. So CapEx hasn't been increasing a whole lot. And cash from operations has just not been growing.
It's harder to value or look at the financials for these types of companies, financial firms, because a lot of times they use leverage. So sometimes revenue is not like it doesn't make sense. Like revenue for like Tesla makes sense. They sell cars, they earn revenue, but a lot of these companies, it's like on a bid-ask spread or the interest spread of their investments. So it's a little more nuanced.
So do you ever look at book value for like banks and financial entities like this?
Yeah, that's what they say. You go, book value is the best indicator. Net income could also be a good indicator for these companies, but cash flow, not so much. Because if they're borrowing some of these financial institutions borrow like hundreds of billions of dollars from the Fed. So how do you value that? Like, because it's just like,
when I look at banks or institutions that look like banks, I use book value, and I try to value based on book value. Yeah.
What tangible book value is a good metric to look at.
So this is the presentation for Virtu, and so they are growing. That's good.
But if you look at price to book, say company A has a price to book of 1, company B has a price to book of 1. So how do you know what's better? Well, you have to look at the risk, and if one of the banks has more risky assets out there, they're not doing as well if they have the same price to book as a company with a smaller risk profile.
Mm-hmm.
That's why in like the Great Recession in 2008, these banks were making so much money because the margins on the subprime and the profits were
Yeah.
so extraordinary, but most of them got burned. Some of them,
Well,
like Bear Stearns, went out of business.
They were lending money they were lending money to people that couldn't pay them, but the fees on it were so attractive. They were really hooked on the fees. And then they were able to package all those loans and sell them off to many offshore investors who got stuck with these subprime loans.
Yeah, you just package it up, you sell it, you sell off, you cut into tranches, but companies got burned. These insurance companies got burned, and it's not just these big banks get burned. Like they made these banks. A lot of these tranches were in pension funds. A lot of people's retirements were gone, or they were mutual funds. So
Foo Hat wanted us to focus on buybacks, and they have bought back a lot of shares. So the average share count, they've gone from 198 million shares down to 160. Very good. Fast. So they rebought a lot of shares.
Yeah, I guess you can look at that. I would look at, I think market cap would be important to look at, because sometimes buying back shares, did they have a page on just buybacks?
Yeah.
Or is it
right here on the screen, share buybacks? And looks like from 2020, they've gone from 198 million shares down to 160 million shares in the first quarter of 2025.
Virtu. But market cap, well, I can only see back. So from March, well, yeah, maybe it's, yeah, I mean, they almost doubled in price in the past year.
And they pay a dividend? Wow.
Maybe they're doing something right.
2.33% dividend.
Yeah, it was under 20 for most of 2023 and 2024, and now it's over 40.
Yeah, man, look at that stock. Went from $16 a share to 41. Oh man. Incredible.
But they use a lot of leverage. It's pretty volatile. That's why historically, if you look at, like, it IPO'd 21 in 2015.
Mm-hmm.
So from 2015 to 2000, so after a decade, it was pretty much flat. It did double the past year, I guess.
So if we look at the times when this thing has just gone parabolic, so they started to go parabolic in 2017. The market was good then, I remember. And then here, 2021, the market was great in 2021. Remember, we came out of COVID. Here's COVID, right? And then the market started going up in 2020, and then it really went up in 2021. It came down in 2022. So if the market's going up as a whole, these guys flourish because trade volumes are up. And there's just more going on in this particular industry, which makes sense, right? And the good times, everybody wants to buy. Everybody wants to buy. And when it gets all ugly, nobody wants to touch, the buy button.
It's kind of like a commodity, this type of stock. And unless you time it perfectly, which is hard to do. But if you buy and hold with the stock, unless you picked it up at a good time, you're probably not up that much. Maybe.
So I'm going to say something, and I know that you really like the stock, Foo Hat, so please take my comments with a grain of salt. But so this stock is not proving to me that it is going to go up and to the right over the long haul. For example, let's look at somebody in the financial industry that I would say is a standard is Visa, right? When we look at Visa,
like a commodity, this stock. It's not going to trade like.
See how
like
Visa
a
is
good
going
company.
up and to the right over time. You see this graph? It goes up and to the right. This is proving to me that this stock continues to compound its value over time. And my concern with Vert is this is kind of a cyclical stock. When trading volumes really go up and the stock market's flourishing, the stock flourishes. Now, my concern is you're kind of at one of the peaks. It was at a peak here in 2018 and it came back down hard. And then it was at a peak in 2021. It came down hard in 22. Well, you're at one of the peaks now. Is it going to come down hard? You know, if we have a huge sell-off, I think you're going to see the stock price probably go down fast. That's my observation. You know, I could be wrong, but it doesn't look like Visa, right? Visa is nice and smooth and to the right. This bodes confidence. There's a lot of investors in it. Costco's probably, but I'm going to stick to Visa because Visa is somewhat in their industry. This is financials as well. And Vert is in financials. So, and JP Morgan would be a good one too. Like when we look at JP Morgan, I owned JP Morgan for a while and I did well with it. It's going up and to the right over the 5-year, up and to the right, far smoother than what we're seeing here.
Yeah. Yeah. I mean, I know you're focused on buybacks, but if you really look at their shares outstanding historically, they're not down. They're
see over the max, they're up 81%, and that's going back to 2015. So that's 10 years.
Yeah.
And if you look at compounded rate of return, that's probably less than 7, right? So it's not like awesome, not like, whoa, man. But if you look at compounding for JP Morgan, they're up 170% just in 5 years. And half the duration, these guys are up 170%. So, yeah, this one is risky to me. I would probably be buying if it was maybe down here. I'd wait for it to come back down and then kind of try to buy in and have an exit plan, which is I'm going to buy in. And when I hit 30% gain or 50% gain, I'm out. So,
yeah. Interesting stock.
Yeah. Well, good luck with that, Fuhat. Keep coming back, man. Let me know how that goes for you. Hopefully the comments were, if anything, just 2 more points of reference. And we'll see how they go. Let me read your comments. So they do a lot of buybacks. Cool. They're used. Yeah. I wasn't meaning to compare Visa with them and saying, oh, they're similar. I was just kind of trying to show like a stock when it has a chart like this, it just has, I feel a greater sense of confidence that the stock's going to continue to go up and compound. And when I see a chart like this, it feels like this goes up and down, has a cyclical kind of pattern, and we're up at a peak and it can come down again. Well, I'd rather it come down and then I'll ride it up because it hasn't proven yet to be a stock like this, like JP Morgan, that has gone up over time and risen over time. All right. So Eric Johnson, have you taken stock advice from AI yet? Nope, not me. How about you, Scott?
No, I don't even really use AI.
I use it
more.
I'm using Meta. I'm using Meta. I've used Gemini. I've used OpenAI. My 20-year-old son swears by OpenAI. But I think it's good. Like giving this one a trial run. So give me a summary of Vert stock. We just went over Vert stock to see what it does. So it gives me a summary. Okay, good. Now let's give it a tough question. What is the value of the stock using book value? In some cases, it does a really nice job. In other cases, it's like, well, it's kind of good. book value is 1391, but that's wrong. It's late. I remember seeing it was higher. So the AI, oftentimes it's old data. See, like when I look at book value here, it was quoting $13 and something, but it's up to 1823. It's quoting like these numbers. So you see how the data is old? Because it's trained on data and it's trained on a bunch of data and it's taken old data. So I'm not using AI to make decisions. If it's something that it could easily write an email for me, okay, cool. It's not an important email. Okay, I'll do that. So price to book, $2.96. That's pretty good. So actually it's too high. You want the lowest number possible. Yeah. So, all right. So we're not using AI. I'm down to come on live sometime. Yeah. Look me up. If you can go to my channel, get my email, I'm game. I'll have you on the live stream and we talk through Vert. And definitely, I want to hear your point of view, dude. And way to be passionate about Vert. Just be open to other, points of view, because I'm trying to help investors make more money. I'm not trying to keep anybody from making money. So that's my intent. All right. So we've already been going for a while.
Yeah.
I'm getting hungry. I got to go have some dinner.
Yeah, me too. Yeah, it's always good to stream. We should do it like somewhat consistently, maybe every other week or something.
Yeah, my weekends are free up. I know weekends are probably gonna be easier. Maybe in 2 weeks on a weekend, we can do it. And then maybe we can do it like twice a month, maybe a weekend stream or during the week, one during the weekends or something, maybe twice a month.
Yeah. No, that sounds good. It's thanks everybody for the comments, and feel free to ask me anything. You can comment or email.
Yeah, thanks, Scott, for joining me. It's a pleasure. Have a nice weekend.
Yep, you too.
Good luck with your investments.
You too. Okay, thanks a lot. Talk to you later.
See you guys.